Have you ever looked at one of those huge, famous companies and just wondered, what's really going on behind the shiny logo and the slick marketing? Well, today, we're going to crack the code that lets you do exactly that. I mean, it's a totally fair question, right? You hear a CEO on the news saying everything's fantastic, but how can you actually be sure? How do you get past the talk and find out the truth about a company's financial health? And see, that's the whole problem. If every company just made up its own rules for reporting, it would be total chaos. You couldn't trust anybody, you couldn't compare one business to another. To work, business needs a common language, one that's based on cold, hard facts. And that really gets us to the heart of the matter, what you might call the corporate trust problem. So, what's the solution? Well, it's a pretty elegant one that's been developed over centuries. A powerful set of documents that we call financial statements. These are truly the bedrock of how we trust businesses. So let's dig into what makes these documents work. It's all about speaking the language of business. You see, this isn't some casual conversation. It's a language with very strict rules. There are global standards like IFRS, which is short for International Financial Reporting Standards. These rules make sure that when Company A reports their profits, they're measuring it the exact same way as Company B. It creates a level playing field, so everything is comparable and, most importantly, trustworthy. Now, to understand this language, you really only need to know the two most important parts. And I think the best way to think about it is this. One of them is like a snapshot, a single moment frozen in time. The other is a story. So let's start with that snapshot. This is all about getting a picture of a company's wealth at one very specific point in time. The official name for this is the Statement of Financial Position. But honestly, the photograph analogy is just perfect. Imagine you could freeze time at midnight on December 31st and take a complete financial picture of a company. That's exactly what this is. This picture starts with all the good stuff, everything the company owns. We call these its assets. This is all the valuable stuff, cash in the bank, their buildings, their computers, even all the products sitting in the warehouse waiting to be sold. But of course, just seeing what a company owns is only half the picture. You have to balance it against everything the company owes. These are its liabilities. So this would be things like loans they have to pay back, bills they owe to their suppliers, basically any financial obligation they have. And right here is where we get to the most fundamental equation in all of accounting. It's beautiful in its simplicity. You take everything the company owns, its assets, and you subtract everything it owes, its liabilities. And whatever is left over, that's the equity. That's the real value that belongs to the company's owners, the shareholders. It's the company's net worth, right on that one day. Okay, so we've got the snapshot. Now let's move on to the story. If that first statement was a photo, this next one is the movie. It shows you how the company actually performed over a whole period. This is the statement of profit or loss. You might also hear it called the income statement. And the key thing here is that it doesn't just show you one day. It tells the financial story of an entire period, like the whole year. So how does it tell that story? Well, it starts at the top with revenue. That's all the money the company brought in from selling its products or services. Then, one by one, it subtracts all the costs of doing business. The cost of making the product, paying salaries, rents, marketing, you name it. And after you've tallied up all the income and subtracted all the expenses, what you're left with at the very end is probably the most famous term in business, the bottom line. That's the profit for the year. It's the ultimate scorecard, telling you if the company had a happy, profitable ending to its story that year. So we have our snapshot of wealth and our story of performance. But the real power comes when you understand how they fit together. So let's just recap it real quick. The Statement of Financial Position, that's the snapshot. It shows wealth at one single moment. The Statement of Profit or Loss, that's the story. It shows performance over a period of time. One tells you where you are, and the other tells you how you got there. You really need both to get the full picture. And here's the cool part. These two statements aren't separate. They're totally connected. That profit from the story, from the profit or loss statement, it doesn't just disappear. It flows right into the snapshot for the next year, increasing the owner's equity. It's this continuous, living cycle. And that brings us right back to where we started, the trust problem. Financial statements solve that problem because they replace guesswork with facts. They empower investors to know where to put their money, they help lenders assess risk, and they empower you to understand the real story behind any business you're interested in. Learning this language is almost like gaining a superpower. You can look right past the headlines and the fancy ads and read the real story for yourself. So the only question left is, now that you know the language, what stories are you going to go out and find in the numbers?